Hello, I'm Michael Sheen. Did you grow up in a household where there was a regular cry of, "Turn those lights off," or "You've been in there long enough," or my own favourite, "It's like Blackpool illuminations in here"? Being frugal, making do, mending. That's always been with us. There's always been a cost of living crisis for some households. The pandemic highlighted the gap between those who had and those who had not. The pandemic shone a light on many inequalities experienced by people without savings, people from the Black, Asian and minority ethnic community, people in cramped accommodation, people already marginalised in some other way. What does £20 go towards in your life? A gym membership? A takeaway? A trip to the cinema maybe? £20 can get you some pasta, some fruit, some veg, milk, juice, some biscuits. £20 will help fill up the tank in the car to get you to work or the kids to school. £20 will help you feed the meter in the middle of cooking dinner when the lights go out. The increased cost of heating and eating affects all of us, but it disproportionately impacts lower income households who spend 3 times as much of their household budgets on energy as the richest families. Alongside these financial pressures, expected and unexpected events still happen. Washing machines and cookers still break. Cars still need tyres and repairs. And birthdays, weddings, funerals, they all still happen. Then there's buying winter coats and shoes for the kids. That's £150 right there. I've been interested in finding fair credit solutions for lower income households for a few years now. It's never seemed right to me that the people on the lowest incomes, living in the most disadvantaged neighbourhoods, pay a poverty premium. And that penalty is growing, not reducing. When I first started looking into this subject, there were scores of household names prepared to lend to lower income households. They were expensive, but legal. There's now fewer than 40 high-cost, short-term credit lenders. So, where are people going for the cash to pay for the things they need, that they don't have the savings for, or the budget no longer stretches to? I'm going to give you 2 numbers. In 2017, the FCA reported that 3.6 million people borrowed from their friends or family. In 2020, this number had increased to 5.9 million. And it was only going one way. Some of this is benign. A parent lending a son or daughter some money. A friend helping out a friend. But some of it is finite, especially when it's one low-income household borrowing from another. And some of it may not be so friendly. There's a potential issue here of a rise in illegal money lending, both face-to-face and online. I want households to have access to fair and affordable credit, the type provided by community finance lenders, where the needs of the borrower align with the motivations of the lender. That's why I'm here. I want to talk to you about one such company called Moneyline, a company I've come to know well, met many times, that has a hugely positive impact on their customers, and it's a social enterprise that I believe needs more investment, support and understanding to grow and meet the credit needs of low-income households. I've been a fan of Moneyline since I first began to delve into the issues of affordable credit a few years ago. They lend money to low-income households all over the UK. Small loans, averaging around £600. They've lent about £100 million since they started nearly 20 years ago. Small sums over a short term to people who are ignored by mainstream credit and increasingly unable even to access legal high-cost credit. Remember these guys? As a social enterprise, their ethos and mission appeal to me. No private shareholders to satisfy. Fair salary ratios. Women at the top of the organisation. They lend nationally by phone, online and in branch, mostly in South Wales and the northwest of England. If I was to sum up who their customer is, it's young women with children renting their home, most likely on an income under £18,000 and living in some of our most disadvantaged neighbourhoods. Moneyline's loans are fair. They're not cheap. It can be triple-digit APR, but if, like me, you do your homework on APR, you'll see it's not always a good guide to whether a small loan over a short term is good value. We made a film about this before. Is 1,614% APR. Good video, that. Moneyline lend to meet their costs, not to make profit. For years, Moneyline paid annually about £100,000 to borrow and lend £1 million. That's a lot of small loans that need to be lent out just to pay for that alone. They know their customer. They'll see if you are entitled to benefits or grants, and they'll only lend if it's affordable. Not just that, they encourage you to save whilst you borrow. They can offer home insurance if you need that. And they understand the occasional need for missed payments without penalty. Hardly any loans in the UK are taken out for under £1,000 on a term under 52 weeks. Almost all Moneyline loans are under £1,000 and under 52 weeks. That's a niche market, but an important one for cookers, washing machines, bunk beds, home improvements, Christmas, weddings, funerals, and holidays. They have a deep understanding of the impacts of a lack of access to credit on low and lower income households. And they believe in building a relationship with their customers. They start from a positive position of trust and valuing the individual and really understanding their circumstances. What they lend each year is a drop in the ocean of what they could lend if they had more capital to lend to more people. About 3 in every 5 people in the UK own their home, represented by these red apples. Usually, not always, this means they have an asset, their house. They tend to show up as better bets for your main lenders when they're thinking on who to lend to. About 2 in 5 people in the UK are renters. Even if they pay their rent on time, all the time, that isn't recognised on their credit files. So renters, particularly social renters, tend to have poorer credit files, along with the lowest incomes, the least amount set aside for savings, and disproportionately more likely to live in poorer communities. Where do Moneyline borrowers tend to live? 4 in every 5 people Moneyline lends to are renters, and only a fraction are owners. The rest are living with friends or family or sofa surfing. They're also not owners. Moneyline's customers are good apples who usually rent their home. About half are wholly reliant on benefits. The rest work in generally low-paid jobs. 9 in 10 people who worked at home during the lockdowns were on above-average incomes. They tended to be the ones saving money on lunches and travel costs. Moneyline's working customers were still working in supermarkets and hospitals and factories, in security and driving jobs. They spent more, not less. In the past 2 years, the market for lending to lower income households has changed dramatically. This report says that in the first 9 months of 2019, just before the pandemic, high-cost lenders lent £730 million. That's a lot of money, expensive too. In the first 9 months of 2020, these same lenders lent £159 million, a drop of nearly 80%. So where did people go? Those who needed credit. The need doesn't dry up. People can go without for a while, make do and mend for a while, skimp, use savings, borrow from friends or family, or do without. But sooner or later, they'll need a lender who can lend them some cash, fairly, flexibly, and with dignity. Moneyline can do that. Imagine this is all the households in the UK. That's the percentage that are lone parent families. This is the percentage of lone parents that Moneyline lend to, 4 times as many. Each pile is an income group, all the way from the bottom to the top income earners. Now, at Moneyline, they don't lend over here. The average Moneyline borrower is in the bottom fifth, and it stacks like this. In bottom fifth, in next to bottom fifth, in middle fifth, none in top 2/5. All Moneyline's data is available in their online report. Read it, please. You can supply your own biscuits. For me, Moneyline is leading the way in using what they know about their customers to create greater flexibility and tailoring of products, payments, and customer experiences that fit with how real people on low incomes live their lives. If you look up Trustpilot scores on Moneyline, you'll find thousands of customer reviews. These are real people who see Moneyline as a valuable part of their lives, a lender who has been genuinely helpful. Yes, there are some disgruntled people on here too, but for 95% plus of these reviews, they're excellent. Moneyline are more than a lender. They offer wraparound care. In branch, they'll offer you the chance to save along with your loan repayment. Since they began, over £14 million has been set aside in savings from people whose previous experience of saving money was, well, usually they didn't save money. They'll offer you the chance to get home contents insurance. That's a big deal for renters who are more likely to suffer fire, theft, or even flood damage. Moneyline reckon 9 in 10 of their customers has no home contents insurance. They'll help maximize their customers' income or find alternatives that don't involve interest if they can. They always put the customer first. I've had the chance to hear from Moneyline's customers before, their own stories on why a loan from Moneyline mattered to them at the time they took it out. These are a selection of real borrowers telling their stories on why Moneyline matters to them. We've changed their names, we don't need to draw attention to them, but believe me, these are their stories as they told them.
I'm probably better off than a lot of people. I kept my job, although they cut my hours.
Jeff is in his 50s, a security guard in one of those business centres with lots of high-profile tenants. His work pattern is grueling, of 2 days on, then 7 nights on, and then 5 off. The loss of hours due to the COVID-19 pandemic meant he had to contact Moneyline to reschedule his latest loan repayment.
They were great, more than helpful, I'd say. They didn't have to do it, but they did. It just makes things easier.
Jeff first used Moneyline when passing their offices in Pontypridd.
I needed help to pay a bill, a car repair. The garage might have been willing to split the payments, but I didn't want to ask them to do that. They've helped a few times. I use the office as I prefer to deal face-to-face. It's more personal.
In conversation, Jeff acknowledged the occasional sleepless night from money worries. Recommending Moneyline to others.
I told a bloke at work about how good a deal I got. I tell people not to be daunted. They're friendly, explain everything in layman's terms. In fact, I'd stick with Moneyline even if they were slightly more expensive than an alternative. They're on your side.
Jeff may have to borrow again. His daughter is planning her wedding. Jeff isn't in a position to contribute to it, but he wants to be there, and he wants her to be proud of her dad.
It's one of those country hotel places. I'll need to stay there the night of the wedding, and maybe the night before. That'll cost a few hundred, and I want to be able to buy a few rounds. I would go straight to Moneyline. For me, they're friendly, helpful, and understanding.
I couldn't believe it was so good when I saw the leaflet compared to Provident and Morses and the others I'd been using. Those firms are so costly. You never seem to have paid it off. Moneyline compared to them are not expensive at all. I've had 15 loans. They cover home improvements, a car, Christmas, holidays. The first time I borrowed, they set me up a savings account. I wasn't sure, to be honest, but it has changed my whole perception on budgeting. I cannot believe I can save now. They're the best company I've ever been with. They support you if you're falling behind. A simple phone call and you're back on track. With other lenders, I felt pressured. People at my door, embarrassed. Once I had to have someone come to the door with me. I was so intimidated. I was young, in my 20s when I used those lenders, and they mess with your head. You're afraid, really, of them and of what might happen. Moneyline has taken all that away. It's a relief to know they are there. It's a weight from your shoulders. With coronavirus, it's been tighter. I can't believe how much the kids eat Monday to Friday when they're not at school, how many new games we needed, and much more. Having Moneyline is great. They're honest, reliable and cheap. With them, I manage better.
Moneyline has built a fit-for-purpose financial services organisation that has the capability and ambition to scale over the next 3 to 5 years. And with the income gap widening and the options to plug the gap narrowing, Moneyline remain determined to continue to design products and services that deliver value with simple and useful ways to access what you need when you need it. Build resilience by bridging the financial gap to get back on track when money is tight, or by saving a bit of money. Create the mental well-being that comes from knowing you will be treated like a human being with respect and dignity. And you can worry less about how you will provide for your family. Products and services that make sure that people in vulnerable financial circumstances are not left behind. If you want to know more about Moneyline, or about how you can help as an investor, or as a partner, or as a policymaker, about supporting the work they do, addressing exclusion, and building social capital within the lowest income households, then please get in touch or read their report. They'd love to hear from you. Thanks.